Millions of everyday Americans find themselves in a situation where the value of their homes is suddenly worth less than what they owe. Who's to blame is almost beside the point now. Tonight, it's a question of how to fix it. We begin this evening in Georgia. Its once booming economy suddenly slowed to a crawl. This is the story of a politician, an elected official, who thought he had a way to prevent the mortgage mess in his state until he ran head-on into the powerful interests of Wall Street, who were making billions off the backs of those who could least afford it.
I'm a capitalist through and through. I believe in making money, and I try to make money, and I try to be in businesses that make money. There's a difference, however, in charging a rate of interest that may penalize a borrower because they have a few blends on their credit, and taking advantage of them so that you just absolutely push them to the ground.
Roy Barnes is the former Democratic governor of Georgia, but his career has been much more than politics. He's also a lawyer and a banker, and that background in banking gave him an early insight into what was going on, what was really going on, when lenders were making high-cost loans to people who couldn't afford to pay them back. Small-town banks on Main Street were bundling those subprime loans with other less troubled loans and then selling them to big firms on Wall Street.
Wall Street created a demand for that dirty paper, I called it. It just exploded, and I knew it was not a good practice, and I said, we need to stop this.
You used the phrase dirty money.
Mm-hmm.
With a second or two to think about it, too strong?
No, dirty money is and it's an accurate description in my view. And and don't get me wrong, and I want to make sure that people don't think that I'm just this nut. I believe in capitalism. I believe if you got bad credit, you pay more. I don't believe that you're gouged. I don't believe that you're just absolutely taken advantage of. And when you do that, then that's dirty.
Roy Barnes was elected Georgia's governor in 1998, and he soon noticed a trend. Predatory lenders, or lenders who convinced customers to borrow beyond their means, were targeting some of the most vulnerable citizens of his state.
There would be primarily African-American women who'd worked all their lives and they had a modest home and it was paid for, and then they need something done with the roof or some windows or have a little credit card debt, and they would go borrow $20,000 and $25,000 on their homes. It was a first mortgage, and they would just be paid these outrageous interest rates and charges.
Ruby Clark says she is a typical borrower who has been taken advantage of by predators. Clark, who is 65 years old and living on Social Security and a modest income, says she got caught in high-cost loans when she needed to do some home repairs. To qualify for the loan, Clark later learned, the mortgage lender falsified her income and hid the true cost of the loans from her. It was women like Ruby Clark that Governor Barnes wanted to help in 2001 when he put all his political weight behind a tough new anti-predatory lending bill called the Georgia Fair Lending Act. This new law made it illegal to offer extremely high-cost loans. It also required that when a borrower refinanced a loan, it had to benefit the borrower. The bill passed, and Governor Barnes was a hero to consumer groups because he finally seemed to be curtailing abusive loans that pushed some people into out-of-control debt. But the big money on Wall Street didn't like that. The lending industry, lobbyists and all, pushed back hard, especially when the Georgia governor added a provision that the so-called secondary market buyers of these loans, namely the ultimate loan holders like those on Wall Street, were to be held liable. Under the governor's then new law, those ultimate holders of the bad loans could be fined or prosecuted.
This is what struck a nerve, and I did not realize how important it was until, of course, in retrospect from the subprime mortgage collapse. It was that if a bank or a mortgage broker made the loan and they sold the loan, like in these securitizations, that if there was something wrong with the loan, the person who bought it was still on the hook for it. It's called assignee liability. And that just sent everybody, all these legitimate bankers, into orbit.
In those days, legitimate bankers buying mortgages on the secondary market included Fannie Mae, the giant buyer of mortgages that long had played an influential role in the housing market. Fannie Mae was created in 1938 by the government to buy mortgages from original lenders so that those same lenders would have new cash to make more loans. Today, Fannie Mae has become a symbol of the unquenchable thirst for subprime loans that borrowers couldn't afford. It is these very loans that have pushed the housing market and the economy to the brink and beyond. Fannie Mae sent a letter to Governor Barnes dated April 4, 2002, asking to be exempt from Georgia's new predatory lending law when it went into effect 6 months later. Little did Governor Barnes know just how involved Fannie Mae was in buying these abusive subprime loans.
I went through the roof. They came in and said, "We don't. You need to exempt us from the predatory lending law." And I didn't realize at the time they were creating a secondary market and as many subprime loans.
So they were already into it.
They were already into it
Big time.
big time. And what I did was, when they got that, I started looking into it, and I called and I said, "Are y'all in this business? This is a dirty business." And they finally backed up and sent a letter. "Oh, we think it's a good idea."
But why would they have done that? Why would they send you a letter saying, "Listen, we need to be exempt for this so we can make these predatory loans"?
Well, it was a profitable business.
So profitable that others tried to derail the effort to rein in abusive lending. Vincent Fort is a Democratic Georgia state lawmaker. He says he witnessed the industry mount an intense lobby campaign against the Barnes effort.
They had a literal army of lobbyists. I often joke that if I had gotten a 10% cut of all the lobbyists that they hired, I'd be set for life.
Fort says during this time the Atlanta Capitol was swarming with hired guns representing every conceivable financial interest.
You had the mainstream banks, Bank of America, Wachovia, First Union, pitching in. You had the mortgage bankers who were not banks but did lending.
No one company was more active lobbying against the effort than AmeriQuest, at the time one of the fastest growing subprime lenders in the nation.
They realized a couple things. One, they realized the importance of politics, and they spread a lot of money around in terms of campaign contributions. They were sponsors of baseball stadiums and the Rolling Stones concert.
That's why we're sponsoring the Rolling Stones tour.
So they understood, marketing. They were a linchpin in the effort to stop anti-predatory lending legislation.
AmeriQuest, its executives, and their spouses and associates contributed more than $160,000 to Georgia state political groups from 2002 to 2006, according to the Wall Street Journal. And it wasn't just in Georgia where AmeriQuest spread its largesse. They contributed at least $20 million to state and federal political groups during this same period of time. AmeriQuest founder, the late Roland Arnold, and his wife were major political